Hey everyone, you're listening to the Accounting Podcast, your weekly roundup of news in the accounting profession. I'm Blake Oliver.
I'm David Leary. Blake, we have a lot of stories this week, but before we jump into all of them, let's just do the first one, which is AICPA and NASBA, they owe us an apology, Blake.
You mentioned this last week. You said you were going to talk about it. Okay, why do they owe us an apology?
You were very loud about the 150-hour rule. Very, very loud. So loud that it got the attention of state societies and got attention of NASBA, got attention of AICPA, and they kind of put us on a naughty list. Like, there's an unofficial AICPA naughty list to where we'd release an episode, then we get a phone call or we get an email. Hey,
talking
you should have said that, right? We get a put in the corner for a little while. And well, last week the AICPA and NASBA have officially formally endorsed 120-hour CPA licensure pathway and the newly released 9th edition of the Uniform Accountancy Act. So now this is like real. Like it's not just lip service or they're thinking about making a change to an alternative pathway. It is now endorsed in the Uniform Accountancy Act. So
and we saw
you were right. You were right.
Well, thank you, David.
You're on the right side of history.
It's good to be right. It feels good. I think the accountant in me likes it when I'm right. And we saw another state approve the 120 credit hour pathway. Alaska became the latest state to ditch the 150-hour CPA requirement. Interestingly, Governor Mike Dunleavy, who spent his whole career in education as a teacher and superintendent, stayed completely silent on the bill. He didn't sign it or veto it. It just became law automatically when he let it just pass across his desk. So another state goes for 120. Great to see. David, I have so much to talk about with AI this week because we saw the launch of GPT-5 yesterday. I watched the launch announcement. I want to talk about my impressions of the new model. I played around with it yesterday and this morning. I am in love with it. It is really cool. They made one tweak in particular that I really like, that is going to make it really useful for accountants and for me. And even though I'm a little concerned about this lawsuit with the New York Times and how ChatGPT can't delete any chats for certain plans, which makes it potentially discoverable even if you delete it, I might just ignore that because it's so powerful. They also screwed up in their live stream, and I wasn't the only one who saw this. They put some charts on the screen, like during their presentation, that just didn't match up with the numbers. They're just completely wrong, like one bar lower than the other. We'll talk about that. I want to hit on the Bureau of Labor Statistics revisions and the firing of the head. Trump fired the head of the BLS. It's like firing your accountant if they don't give you good numbers. The tariffs are now in effect. We're at 15% average tariffs. We'll talk a little bit about that. The SEC is allowing stable coins as cash equivalents. Only some of them, though. And if we can get to it, we've got some listener mail. Google SEO is dead. There was a bunch of app news, fundraising, new features. Hopefully we can get to all that. Maybe a little bit of follow-up. David, you had some stories, too. I'm really interested to hear this one about Baker Tilly telling CPAs not to use their license on...
That bubbled up again.
Online.
Yep, not allowed to use your CPA license.
And that is, PE is being blamed for that. Whipfly raised PE money. You've got this story about a fintech that serves doctors that bought an accounting firm. And KPMG is saying, don't blame us for Silicon Valley Bank. They were the auditors when Silicon Valley Bank collapsed, and there's some sort of lawsuit, and they're trying to fight that. So, lots to talk about today, but first, let's thank our sponsors.
Sponsors this week is OnPay, Keeper, Missive, and TeamUp. So hopefully everybody supports our sponsors because that's what makes this show possible every single week.
And welcome to our live stream viewers on LinkedIn and YouTube. Please comment. Let us know what you think. We love to interact with you. Hey, Christopher. Hey, Jafar and Zephael. Great to see you as well on this Friday afternoon. Don't forget, you can join us live. Subscribe to the Accounting Podcast on YouTube. Hit that notification bell icon. You'll get a notification wherever you are on your phone if you got the YouTube app installed, and you can join us when we're live. And you can earn free continuing professional education wherever you watch or listen. After you watch this episode, wait a couple days, the course will appear on the Earmark app. You can create a free account and earn free CPE for listening. Just go to earmark.app, create your free account, and join the tens of thousands of accountants, CPAs, CMAs, enrolled agents who are earning free continuing education. And I want to highlight one show on our app that is doing really well, and that's called Tax in Action with Jeremy Wells. He is all about practical tax for accountants. It's not just theory, it's real tax information you can use. Do we have like 10 episodes now of that show going? It's for subscribers.
I think it's like 6. I don't know if it's 10, but I think it's like 6 or 7, but it's doing really well.
It's a great show. It's one of our shows that we're producing with Jeremy. He's doing a great job. So if you are interested in some different tax continuing education, do check out
What's good
Tax
about
in
that
Action.
show is it's one topic. It's not a high-level overview. It's just one topic at a time.
Each episode is one topic.
Each episode, yep.
All right. Do you want to start with this removing the CPA, this Baker Tilly story? I'll put this on the screen, David. You found this on what site was it?
So I got exposed to LinkedIn. So I saw this on LinkedIn yesterday. This is a screenshot from Reddit. So yesterday
Hold on one
on LinkedIn,
second. It's not there. It is now. It's on the screen.
Right. Yesterday on LinkedIn, it really bubbled up again. So somebody posted that they wish, or
hey, can you refresh that, David? It's a little blurry. Sorry.
Okay.
Something's weird with our live stream sharing.
Where'd it go? There it is. Refresh.
There we go.
Now it's readable?
Yep.
Okay. So on LinkedIn yesterday, this whole story bubbled up again about how, like, another set of people are discovering, wait a minute, people are being told to remove CPA from their email signatures and their LinkedIn. So we covered this, 6 weeks ago, 4 weeks ago? Right?
It's been ongoing. And apparently this is not a new thing. This has been happening for a while, for years, but it's accelerated as private equity has made more and more investments into mid-size accounting firms.
And so now the latest is Baker Tilly. So this is a screenshot of an email from the chief risk officer at Baker Tilly. And I'll just read it. To remain in compliance with recent Board of Accountancy requirements as part of our new alternative practice structure as Baker Tilly, we are implementing a new policy outlining when CPA designations can and cannot be used. This is a new policy for both Heritage Moss Adams and Heritage Baker Tilly. In short, the new policy will outline that only principals in the licensed CPA firm Baker Tilly US LLP may include their CPA designation, if properly licensed, in their firm's email signatures. No other principals or team members may include their CPA designation in their email signatures. In external materials such as LinkedIn, a CPA designation can be listed as part of your educational experience or license is maintained. However, only principals should reference their CPA designation in connection with their employment with Baker Tilly. So it's the same story we saw a couple weeks ago where you can't have CPA on your name. And I don't know why this bugs me because I'm not a CPA, Blake. I just know lots of CPAs. But I also know, like, if I busted my ass and put in the hard work and had it, I would not want to have to pull that off of my profile, right? So I kind of put a comment, and it's gotten a lot of, this Reddit post itself, in 24 hours, it had 1,000 upvotes and over 250 comments. Some of the comments were pretty funny. One person said, I work at Baker Tilly and did not receive this email. Who cares? I'm not going to take it off. And then he edited the post. He said, just got the email, still not going to do it. So people are like revolting against this. I have a suggestion, and I did this in support. In support of CPAs everywhere, I think all LinkedIn users should go add CPA to their profile in protest. And I actually did this last night. I added David Leary, CPA, completely pretend accountant in support of accountants that are being forced to remove CPA off their title in LinkedIn. It just doesn't pass the smell test. You talk to anybody outside the industry and say, hey, is it okay if a CPA is forced to pull this off their profile? They wouldn't pull this on doctors or lawyers. Like, why it's being pulled on accountants is ridiculous. It's just not. It just bothers me, and I don't even care. I don't even have CPA on my page, but
it's a bad situation, and you could blame private equity, but you could also blame the state boards of accountancy who have created this situation where the lawyers at these firms are saying, we don't want to deal with the issue that you're creating for us, telling us that we can't call ourselves a CPA firm, or our people can't hold themselves out as CPAs if they work in this non-CPA firm in this alternative practice structure. It's the boards of accountancy that have created this problem. So I think they need to figure out how to fix it. And it's too late to put the cat back in the bag when it comes to the alternative practice structure. The firms are doing this. It's happening. Yeah. So don't punish the individual CPAs for this. And I don't really think it helps in terms of preventing confusion. It's like,
here's a good way to get a bunch of people not to ever become CPAs or join the profession. Like nobody's got your back. Why would you become a CPA if you're going to work your ass off, pass the test, and then somebody says you can't put it on LinkedIn? Sorry.
And there's so much more that the state boards could be doing to protect the profession, to protect the public, that they're not doing because they're just distracted by stuff like this. Here's a great example. A Connecticut CPA just got 3 years in prison for stealing over $53,000 from clients across multiple schemes. The CPA, or I don't know if they're still a CPA, Carl Anderson, was arrested 3 separate times in just 4 months for different thefts from his accounting clients. But here's the crazy part. He had already served over 4 years in prison in Washington state for similar crimes in 2008, but Connecticut still granted him a CPA license without checking his criminal background. So here they are, these state boards telling firms, pressuring firms not to let their people use the CPA or giving them a hard time about these alternative practice structures, and yet they're letting CPAs get licenses with reciprocity and not doing proper criminal background checks. And the CPA stole from his clients. And I guarantee you, if we see a story like this isn't the only time this has happened.
I bet you if you go to his LinkedIn profile, he has CPA on his profile still.
BF Borgers managed to keep his CPA for months and months and months before he was finally pressured not to use it or to give it up. I want to highlight a comment we just received in the live stream from Tim Butters. Tim says that the IRS commissioner just got fired.
What? Wait a second.
And I am pulling this up right now.
CNN.com.
Here it is in the New York Times.
Whoa!
Trump is replacing Billy Long as the IRS commissioner. He's only been in there for weeks, it seems like. We
just talked about it Monday or Tuesday. It was like brand new.
This is according to 4 people familiar with the matter. Why is Trump removing Billy Long? He was an unusual choice. No background in tax policy beyond promoting tax credits that the IRS has warned are riddled with fraud. And while he was in Congress, he supported legislation calling for the abolition of the agency entirely. What?
Can I speculate? Can I speculate?
Yeah, you're always welcome to speculate on this show, David.
The last week or so, I think he's been out there saying when the IRS is ready, he's going to try to implement the laws passed in the OBB. Am I saying enough B's? OB3. The one big beautiful bill. The big beautiful bill. I wonder if he actually got into the IRS. He's been talking to all of these employees. You said he's been having one-on-ones. He actually understands maybe the state of the IRS, and maybe he went back to Trump and said, "Hey, Trump, we can't do a lot of this stuff because I don't have the resources to do it." And maybe that's why he got his ass canned, is because he pushed back on Trump, and Trump doesn't like it when he doesn't hear the answer he wants. But this is shocking. This is the story I did not see coming, that he would be cut 2 months in.
Right.
He's just gone. Wow.
And there were some positive stories about Billy Long. He was showing up to the IRS offices early to meet with people who had never before met with the commissioner. He was listening to the employees. He was even telling employees to leave early on Friday afternoons. That seems like a popular thing. Oh, well. More chaos.
Why did this happen
IRS.
an hour ago so we could have prepared for this news on the show?
Well, it happened because it's a perfect lead-in to this firing of the BLS head story, which I want to talk about. We also got a comment here from Isaac. Isaac says, My home state, South Carolina, passed a bill this summer changing the education requirements to sit for the CPA exam. Now I can pursue it without getting my master's. I will add CPA to my profile. LOL. Yes, Isaac. Listeners of this show, do not give in to private equity. Do not give in to the bureaucrats at the state boards of accountancy. Keep your CPA on your LinkedIn. And if you get fired for it, tell us. We can't give you a job, but we can share your story with the world. We must fight back against the degradation of the CPA.
Well, and that's the thing. Like, I don't think anybody's going to get fired over this. Like that would be a death knell for a firm. They'd probably have massive employees just quit if they fired it. One of your teammates, if they fired them because they use CPA on LinkedIn, everybody would walk out of that firm. It's a death knell. So I don't think they have the power to actually do anything about it. People should just keep using it.
Let's thank our first sponsor, who is OnPay.
OnPay.
I'll do this one. Forbes and CNBC rank OnPay number 1 for small business payroll. OnPay really knows how to get payroll done right for every client you serve, no matter how complex. Their software is easy to use and backed by outstanding service levels. They handle new client onboarding for free and have experts on call to keep you and your clients on track. The system includes multi-state payroll, local tax filings, integrated HR tools, and more with no hidden fees. When you join OnPay's partner program, you get a custom dashboard to easily manage all clients in one place. Plus, you can gain exclusive perks like revenue sharing or discounts, free payroll for your firm, co-branding opportunities, premium swag, and more. OnPay helps you run your practice efficiently while providing exceptional payroll that your clients can count on. And we use OnPay for multiple entities with our businesses, and we love it. To learn more about using OnPay for your firm and clients, they could be farms, startups, restaurants, bars, doctors, nonprofits, gyms, franchises, dentists, podcasts. Head over to accountingpodcast.promo/onpay. That's accountingpodcast.promo/onpay. And when you sign up, let them know you heard about them on the Accounting Podcast.
So while you're reading that, I just checked Twitter quick about Billy Long, and this is from Grok. So Grok was like the top result thing in the latest. And it said, reports suggest a possible ambassadorship for Long. So is that like is an ambassador like a promotion or a demotion if you get ambassadorship of a country? Depends on the country, I guess.
Depends on the country.
Country, yes, that's true.
It can be a pretty sweet job if you get like a nice country, like, I don't know, ambassador to the UK or something like that. That's pretty great. They pays well. You get a private residence. You're like living like a king in a foreign country. Well, hopefully this is a promotion and not a termination. But we will see what this means for the IRS. All right. Should I talk about the Bureau of Labor Statistics and Trump firing the head of the Bureau of Labor Statistics? We got to talk about this. So, why did this happen? In June, the government reported 147,000 new jobs. The administration hailed this as really good news. But then recently, the BLS revised their numbers. And in June, it turns out employers only added 14,700 jobs. That's a 90% reduction. Trump was not happy about that. But this is a normal thing. He claimed that the numbers were being rigged for political reasons against him, but it's hard to imagine that. I've been following the BLS for, I don't know, ever since we started doing this podcast. We pay a lot of attention to these numbers. Economists use these numbers. And it's important to know that these revisions are normal. And they happen because the BLS sends out a survey to about 100,000 employers every month. And they have to publish these numbers every month. So if employers don't respond to the survey, they keep the survey open, and then as the additional responses come in, they will revise the data. This is normal. And
I feel like they always say revised all the time. All these studies, It's like revised, yeah.
Well, there's the monthly report, and then there's the revised, and they revise the previous numbers. And so it's sort of like this rolling average situation. And the administration didn't like this. Trump didn't like this because the numbers went way down, and it was not good news. And it's especially not good news in the context of the tariffs coming into effect and economists predicting generally slower economic growth, although not a recession. That's not good going into midterms next year. And why have the numbers been revised downward so far? You could say it's the unpredictability, the uncertainty created by the economic environment due to tariffs. But also, the BLS has had an 18% budget cut since 2009. So in the middle of costs going up, inflation going up dramatically, 20% increase in the cost of everything in a lot of cases, the BLS has had a budget cut. So they're struggling to collect this data and report on it accurately. And to me, this is like if you're a business owner and your accountant gives you an interim P&L that's based on incomplete data because you haven't provided all of the information they need, and then they give you another P&L later where the numbers don't look as good because now they've got more data, and you fire them for it. This is like
I'm
firing.
sure this has happened. If you're one of the live attendees in the chat, if this has happened to you, please just say, yes, I've been fired because a client did not like the balance sheet and profit and loss statements.
It's shooting the messenger. So this is concerning because there's a lot that rides on the BLS numbers. The consumer price index data from the BLS controls in many ways how much you pay in taxes, what you get from Social Security, and how much you earn on certain investments. And if inflation is not measured properly, this is one of the other things that they measure is inflation, your tax bill goes up because brackets don't adjust properly, or you don't get those cost of living increases for Social Security. And there's even this $2 trillion market for inflation-protected bonds that could get thrown off. So it's really important that the BLS is funded and collects good data and is not politicized.
But in a similar vein, I think, I didn't bring it as a story because I didn't think it was so much accounting related until you brought in this part of it. I think I saw he's telling NASA to crash a satellite into the atmosphere and burn it up because some satellite was giving weather data and temperature data that did not align with what Trump liked regarding like global warming and stuff like that. So he wants to just crash the satellite and stop getting the data.
Right. It's kind of similar. You don't like the news, you don't like the data, you shoot the messenger. But that's basically the path to ruin. And if you study history, you'll find that the reason that fascism and socialism failed ultimately, despite all their other problems, is because the information system in these societies altered to please the people at the top. So the people making the decisions, this happens in communist societies too, the totalitarian communist regimes like China. The people at the top, Mao or Stalin, are great examples of this, punished anyone who gave them numbers they didn't like. And so the people below doing the data collection learned, don't give the bad numbers, only give good numbers to the people at the top. And then they start making bad decisions because they think things are going well when they aren't. So we have to stand firm as numbers people and protect the integrity of the data. We need referees. We need objective numbers that are not colored by politics. It's super critical. And I hope that we as accountants can stand up for that.
And you would hope as a leader, you'd want to have all the data before you make a decision, not just the data you like.
Dustin in the live stream says this happens a lot. This happens at a lot of big corporations where leaders won't listen to employees and don't like the data.
Agreed.
It can happen in big companies too, yeah. And, maybe that's why most of the, economic growth, job creation, that's a good reason why it happens in small businesses and mid-sized businesses and not in bigger ones. Because as soon as you get this layer of bureaucracy where information gets filtered and doesn't get to the top, then you stop making good decisions. There's a lot of other reasons for that too, but I think that's a big one. I guess since we're talking about Trump, we might as well talk about the tariffs. Not a whole lot I want to dwell on here, but we should mention that all those threatened tariffs that were delayed have now taken effect, and we are at about, depending on who you talk to, 15 to 18% average tariffs, which is the highest since World War II. And we previously, before all this, were at like single-digit tariffs. And this, to me, seems like a direct cause of this slowing job market. Why were the numbers revised down? Well, businesses are in this uncertain climate, uncertain economic climate. They don't know what the cost of inputs are going to be due to immigration crackdowns. We don't know what the cost of labor is going to be. It's really hard to plan. And if you can't plan, you can't expand. And so it's natural to see this slowdown. 62% of voters disapprove of Trump's handling of tariffs. And that's according to Fox News. So that's not like a liberal poll there. 62% of Americans disapprove. And there's another thing that's a bit off with the logic of the administration. The administration talks about how the increased revenue from tariffs will offset the tax cuts in the One Big Beautiful Bill. But if the tariffs work and they actually reduce imports, then the tariff revenue will go down. It's like the problem with using taxes on cigarettes to fund your schools. We saw this decades ago. Well, the taxes are designed to get people to not smoke as much or to stop smoking, and so then they don't buy cigarettes, and then the taxes don't end up funding the schools like you'd hoped. Yeah. So we've actually seen our trade deficit drop, but it's not because we're exporting more. It's because we're just importing less. So that's another example where this number that Trump really focuses on, which is the trade deficit, is improving in his mind, but it's not economically beneficial to anyone. Now, we'll see if manufacturing comes back to the U.S. We've seen Apple say they're going to invest $600 billion in manufacturing.
Isn't that kind of how his deal is? Like, hey, if you are going to build, even if you haven't hired yet, if you plan to build in the U.S., we'll get rid of the tax for you.
Yeah, or lower it to something that you can actually absorb,
historically
like 15%.
Reasonably. Yeah, historically
and
reasonable.
give you an exemption.
But I see corporations just playing him, like if you could, if you're Apple, right, you could hire an architecture firm, right, or an engineering firm for $1 million, engage them in making all these blueprints, all these plans, so you could go to Trump and go, look, we're going to build this manufacturing facility here. Even if you bought the land, if you're Apple, it's worth the tax hit you're going to save on the other end. And then when the next administration comes, just scrap up the whole thing and don't build the plant.
Right, just make the plans, but don't actually do
like
real significant investment. We'll see. I mean, I think we definitely see these companies are investing. Like Apple's going to make glass now with Corning, the famous glass company. Great museum, by the way. If you've never been there, go to the Corning Museum of Glass. So cool. They're going to make the glass for the iPhone and the Apple Watches, all that like special, what do they call it, Gorilla Glass? Yeah. So that's neat. I mean, that's manufacturing jobs, but we'll see if that creation of jobs actually is worth it. It's going to be very expensive to create these jobs, and the tariffs might end up destroying more jobs or reducing economic growth just as much as it increases it. So it could be a net zero effect. I'm not saying it won't work at all, but the economics just, it's not great. But the good news is that if we actually stick at like 15% tariffs, while it's not ideal, and there's no economist who would tell you that's better than having lower tariffs, it is something that can be absorbed by the economy. And it will stimulate more manufacturing in the U.S. That's true. It's just the question is how much and at what price.
And when. How long is it
going to take? And that's the thing is it takes years to build these manufacturing facilities. So Trump might not even be in office anymore by the time it happens.
And then the whole supply chain, because chances are if you're manufacturing something, you probably have raw materials that are probably being imported. So now it's just this dance. Like everything cannot just be manufactured only here within the border.
Right. The raw materials can't. We do not have the raw materials here. And actually, that's another thing is like all the mining that needs to happen. Everybody who's in favor of more raw materials extraction, more mining, more oil exploration in the U.S., they're into it in theory, but then when it comes to their backyard, they're not so excited about it.
Oh,
Okay.
this just happened. Talking about backyards. There was this big project to build a data center here in Tucson, a huge data center. And the city council just voted against it and shut the whole project down now. And I find it very ironic that all these people are posting on social media about this, videos, the recording about it. Like literally, all that's in a data center just in somebody else's backyard. I feel it very hypocritical. All this social media campaign that bubbled up to stop a data center is created, and it's all in data centers everywhere. It seems silly to me. It's that my backyard thing.
And here's another thing that doesn't make sense about all this is we don't have enough people here to fill the manufacturing jobs we want to create. American factories have 400,000 open jobs right now. According to a New York Times story back in June, one manufacturing CEO says that for every 20 positions, there's only one qualified candidate. And part of the reason is that the jobs that are being created are highly skilled manufacturing jobs. And it's not so easy just to take somebody who has never worked in a factory and plug them into a factory. Like if you took me or you, David, and put us into some, like let's say that Corning glass facility.
I know nothing about that. Yeah.
Yeah, it's a big investment just to train the people. And then at the same time, we've got reduced immigration. So where are all these workers going to come from? The HVAC industry is another example. They need to hire 400,000 to 500,000 more technicians over the next 10 years. And that's because of the AI boom creating demand for data center cooling systems. But enrollment in vocational schools is dropping and not growing. So these policies are conflicting here. And if we can't fill the jobs we create, we just lose. It's like similar to these $600 tariff checks that Senator Hawley wants to send out to everybody. Tax businesses that import goods and raw materials and then send the money out to consumers. Well, the consumers are going to get hurt way more in the form of higher prices than they're going to get in rebate checks. It doesn't help. And then the stimulus checks just create more inflation. It doesn't make sense. Okay, let's thank our next sponsor, Keeper.
I'll read it. By combining client communications, file review, reporting, and task management, Keeper has everything you need to run your bookkeeping or CAS practice. Keeper is an all-in-one app that allows you, your team, and your clients to easily collaborate to make sure monthly close is efficient as possible. Starting with a beautiful custom-branded client portal optimized for bookkeeping work, your client can answer questions you have about uncategorized transactions, allowing you to categorize and automatically post them to QuickBooks Online correctly, all without ever leaving Keeper. Keeper's month-end file review feature will surface transactions that may not be posted correctly, and with Keeper's customized reports, you'll be able to increase the value that your firm provides clients by giving them reports they'll actually read. Keeper's built-in task management ensures nothing falls through the cracks, and it includes time tracking so you can see where you and your team spends their time. Keeper's email features allow your firm's email communications to appear in one shared inbox that can be easily aligned and turned into tasks for your team, ensuring no work falls through the cracks. Keeper's tax suite allows you to expand your use of Keeper beyond your CAS clients, and now you can use Keeper with all your tax clients too. And Keeper just announced a beta of their new AI bank feeds feature. It's a smarter, faster way to manage your bank feeds. It organizes every transaction into buckets based on confidence, so you can bulk approve the easy stuff and zero in on what needs review. This allows you to speed through the close with fewer errors and less back and forth. You can automate the classification while still maintaining control. Keeper has a very affordable and clear pricing model that starts at only $8 per client per month. To learn more about why thousands of bookkeepers and accountants trust Keeper to manage their month-end close and to get 20% off of your subscription, your first 3 months, head over to accountingpodcast.promo/Keeper. That is accountingpodcast.promo/KEEPER.
And let's go ahead and also thank our next sponsor, and that is Missive. Here at Earmark, we rely on Missive every single day to manage our team communications, specifically our emails and internal chat. And there's a reason hundreds of accounting firms have made the same choice. If you're running an accounting practice, you know the pain. As you grow, you become the bottleneck. Every client email lands in your inbox, you forward it to team members with a quick handle this, and then it just disappears. There's no visibility, no accountability, no idea if it's actually getting done. Missive solves this brilliantly. Instead of emails vanishing into individual inboxes, client communications go to dedicated team inboxes where everyone who needs access can see them. You can assign conversations to specific people, create trackable tasks, and have internal discussions right within the client conversation, all without the client seeing your internal notes. What makes Missive special is that it feels familiar, like the email client you're already using, so you don't have to learn something totally different. But it's also incredibly powerful under the hood. Whether you like to organize by client, by service line, or run pod-based teams, Missive adapts to your workflow. Plus, their AI can automatically escalate urgent emails to managers, so you're not constantly checking every inbox. Ready to stop being the communication bottleneck and want to try Missive for free? Head over to accountingpodcast.promo/missive. That's accountingpodcast.promo/MISSIVE. Now let's talk about the Open AI GPT-5 launch. If you go into ChatGPT and you are subscribed to a team plan, actually it even is available on the free plan, just with limits, you can now access GPT-5. Now, I could go and tell you a bunch of numbers about how this model is better than GPT-4, but that doesn't really mean anything to most people. And I think the thing that is going to make the biggest difference is just the experience. I've been playing around with it, and the biggest difference I've noticed is I no longer have to switch between models depending on the kind of question I'm asking.
You mean as far as like saying do deep research or those
Correct.
types of...
So
I noticed that too this morning. I was like, that's gone. And they must just do, the model just must figure it out and do what it should do now.
So now when you put in a prompt, the model decides how complex the question is and determines whether to just give you a quick answer with a fast model, or if it needs to do extended thinking, or if it needs to go out and do research and get back to you. You don't have to think about that anymore. And just in doing some prompting, I am really impressed with the results that I get. Another thing that's really interesting is that the model seems to anticipate what you might want to do next and offers to do it and says what it will do, and you just have to say yes. So here's an example. I went to GPT-5 and I said, what are the key elements of a reasonable compensation report for an S-Corp? And I got a very easy to understand 10 bullet point list of everything that a typical reasonable compensation report would include. This is the report that you would file away in case you get audited by the IRS for how much you paid yourself as a W-2 employee of your single member S corporation or one employee S corporation. And so it gave me that. It gave me the 10 points with sub-bullets. And then it said, if you want, I can also give you a sample table and calculation layout that would make a reasonable compensation report airtight in an IRS audit. That would make it plug and play for S-Corp clients. All I said was, yes, please. I just responded with 2 words. And then it gives me an example table. And it tells me the calculation logic. And then it also says, if you want, I can give you a ready-to-use Word template with this table, the narrative sections and placeholders for data sources, so you can produce client-ready reports in minutes.
So it gave you like a preview of the table before it went and built the whole thing for you.
It gave me an example.
Got it.
So then it builds the Word template. All I have to say is, yes, please. And it uses Python, and it builds this Word template. And then I told it, take on the role of a reasonable compensation consultant and ask me questions one by one until you have enough information to give me a reasonable comp report for my S-Corp. And then it goes through a set of questions. It did a total of 8 questions, and I just answered them with the information I had. And then it recaps the information, and it does the research on the market rate data. I haven't verified this. I'd have to go do that. It has citations for all of the rates for the different roles. And then it asked me if I wanted to go with a mid-range value or a more higher-end one because I've got a CPA. And I said, no, just go with the mid-range one. And then it actually created the report. And it gave me a Word document I could download. Now, I could see this was kind of short, and it didn't seem long enough. It didn't seem like it would be enough. And so then I had a conversation with it asking, okay, what's missing from this? And it basically goes through this whole exercise with me and creates a reasonable compensation report. And I think I did this in like 10 minutes. And now I need to download this and verify this and check this and whatnot, but that's pretty neat. That's pretty mind-blowing. This is something that would not have been easy to do prior to GPT-5.
Well, and I'll go into my story because I had an experience where obviously on Monday I prepared for the show and GPT-4 was out, and I was preparing today with GPT-5, and we didn't talk about a story last episode, so I was saving it for this episode. So I attempted to do some more research, and it conflicted what I was going to talk about on Monday. So I'll cover the story and kind of paint the picture of what way my brain was working and how I got. It's not derailed. I got misinformation from the GPT.
Well, this happened to me too. This happened to me too. When we were talking in a previous episode about the Big Beautiful Bill, I had been doing research with Perplexity. And I think I had the same issue that you had with this story. So tell me what happened.
I'll tell you the story. So I'll even rewind a little bit. Do you remember when Blackstone purchased Citrin Cooperman, the major P investment in Citrin Cooperman, and the music industry lost its mind because apparently Blackstone has billions of dollars of music catalogs, and Citrin Cooperman has a specialty where they value music catalogs. They valuations for music catalogs, and that's just always stuck with me. So every time I see a P investment in an accounting firm, I kind of work backwards from there. I'm like, that's interesting. Well, when they announced that in the news articles about how Wipfli is taking on PE money from a company called New Mountain Capital, they're going to take an equity investment of around 40%, and that's going to value the firm at $1 billion. And when it had this article, it talked about notable clients of Wipfli. And two of the notable clients are the Green Bay Packers and Philadelphia Eagles, NFL teams. So I was like, that's interesting. I wonder if this private equity company has any interest in professional sports. So I asked ChatGPT, I got a response back, but yes, they did. They actually had, and this is where I started to get derailed. So as of Monday, my research said New Mountain Capital made a majority investment in Legends. Legends is an event management company. They were actually started by the owner of the Dallas Cowboys, so it's between them and the New York Yankees. And they basically help you run your stadium services, your tickets, your sponsorships, your merchandise. They help you run your pro sports team at the events, essentially. And I just thought that was kind of interesting. Like, oh, how convenient. I own a sports services company, and now my accounting firm has high-profile clients I want to buy my... That's the way PE works, right? You get all these pieces and you support all these things you own support each other, right? But in accounting, that independence issue is here, right? And so it should not be the case. But then I started doing more research this morning because I want to dig in more on this. And it turns out, as of my research this morning, Mountain never made a majority investment in Legends. It was a minority investment. Not only that, they already sold it. They sold it like 2 years or 3 years before they invested into Wipfli. So I just got like derailed. Like I thought there was a real story here. Yeah. But it's completely derailed because ChatGPT-4 on Monday gave me a different answer than what ChatGPT-5 did today. And it's pretty major to use the word majority investment versus minority investment. That changes the whole narrative. Like, and completely. That's a pretty big mistake by an AI tool.
And the issue I had was when we were talking about the Trump accounts in a previous episode, I mentioned that there was this requirement that you have to cash out the account at a certain age. I think it was 30, something like that. Or maybe it was younger. But my point was it makes it kind of like pointless as a retirement savings vehicle if you have to cash it out and pay tax or something when you become an adult. And that isn't true because while that was in a version of the legislation, it wasn't the legislation that Trump signed. And it was on the Tax Foundation website at some point, and that's what Perplexity cited. But when I went to the website to try to dig into this to understand it better, because I dug into this, it wasn't there anymore. So these AI research tools they don't think necessarily about what they're looking at in terms of what's true today versus what was true in the past. And they can still hallucinate to some extent. It's a lot lower, but it's still meaningful. It's and we'll see this. I want to go back to the GPT-5 launch because they screwed up. They had an even more embarrassing mess up. Here's a picture of a chart that was displayed in the live stream. Deception evals across models is the headline. And it compares GPT-5 with thinking to OpenAI o3, the previous top thinking model from OpenAI. And check out this chart, David. The bar on the left above coding deception, the two bars. We've got a pink bar that says 50 above it and a white bar that says 47.4.
Wait, so the lower number is a taller bar? That's what I'm seeing, right?
By a lot, right?
Yes.
So there's either a labeling issue. I think this is a labeling issue because they're saying that coding deception went down, but the number is totally wrong. And it's crazy to me that this live stream, this presentation for, this company valued at, how much is it now? Billions and billions and billions of dollars, got this wrong. And they did it twice. There's another chart here when they showcase how it performs on academic tasks, where on the left-hand side here, you see OpenAI o3, 69.1% pass rate, and GPT-4o, 30.8% pass rate, but the bars are the same height.
All right, so I want to follow the logic on this. They're reporting on data about their own company.
Benchmarking of their own
product
LLM.
that they produced.
Yeah.
Using the product they produced to report on this, and it screwed up the graphs.
Yeah, and my question is, did they use AI to create these presentations? And the lesson here is you've got to have a human in the loop. Somebody has to check this stuff before it goes out because, yes, there are still hallucinations. The deception rate in production traffic for GPT-5 is still 2.1%. I interpret that to mean that 2.1% of the time it's hallucinating or lying or getting something wrong. And that's small, but really meaningful.
In accounting, it's super meaningful. This is pretty major.
Yeah. So you got to have a human in the loop on all this stuff. And it's funny to me that OpenAI didn't have a numbers person looking at this stuff before it went out into the world on a live stream
As an investor, I'd be like, that company does not have its ducks in order. They don't have the proper communication channels, the proper marketing person, the proper executive assistant to the CEO is going to probably, whoever was speaking to these slides, that person's assistant didn't watch his back or her back. Like, this is not a lot of confidence in this.
I think another reason this happened is because they used graphic design software or AI to make these charts, and they didn't do them in PowerPoint. And if you do them in a tool like PowerPoint, you have to put the number in when you create the chart, and then PowerPoint automatically, via logic, creates the correct bar size. So if you take that out, if you take the logic out of the process, then that can happen. It's a warning to all. Let's thank our final sponsor, David, and that is TeamUp. If you're a growing firm struggling to scale or turning away clients because you can't find the accounting talent you need, listen up. You probably want to hire a person, not a company. You've heard about hiring in the Philippines, but using outsourced companies comes with an endless turnover and mediocre talent. Introducing TeamUp. TeamUp helps accounting firms hire top Filipino talent directly. No middleman, no corporate policies getting in the way. And when you hire direct, you own the relationship completely, training them on your way and building your own culture. And think about it from the accountant's perspective. They'd rather work directly with you than sit in a corporate cubicle. And these are accountants. They can do the math and know they're getting a fraction of what you're paying the outsourcing company. Ready to see what hiring a person in the Philippines could cost. TeamUp just released their 2025 salary guide for accounting talent in the Philippines, and it's completely free for our listeners. You'll get current market rates for various roles, real candidate profiles, and everything you need to hire confidently. To download your free copy today, head over to accountingpodcast.promo/teamup. That's accountingpodcast.promo/TEAMUP.
I want to talk about, at the end of the day, this is a business model for accountants, and it's a really smart one. So the headline essentially is an investment advisor / fintech that targets doctors just bought another accounting firm. So this is their third acquisition. So they bought a service provider in the space they're in, which is like doctors, dentists, that space. They bought a tax accounting firm, but now they just acquired a second tax accounting firm. They acquired on August 4th. They acquired Boston-based Schwartz & Schwartz PC, their tax and accounting firm. And so you're probably wondering who this company is, right?
Yeah, I was going to say, what's the name of this fintech?
So the name of the company is Earned. So Earned, they target doctors, and they're an investment advisor. So I'm a doctor. I make a lot of money. What do I do with it? Earned invests it for me, and they manage my assets. So Earned themselves, they have 3,000 clients, and they manage $2 billion of assets of their clients. But doctors are busy, right? They have high taxes, they have limited time and career burnout. The doctor themselves probably doesn't want to have to go to, I have an investment advisor and an accountant and a tax guy. It's all under one roof. You get your personal finances, your personal taxes, your business accounting, your business taxes, and your investment all under one company. So it's super smart because they're listening to they're solving for the customer. And if you do that, you know what to offer, products and services to offer. It's really, really smart. And then on top of that, they selected clients that have money, which is also smart, right? They didn't build this niche for restaurant owners, operators, which are struggle. But it's a really smart niche, and it's a really interesting business model. But yeah, so they've acquired, this is their third acquisition. They also purchased a tax firm before in the past, and now they bought another tax firm. So basically now they have a tax firm on the East Coast and West Coast, and they're offering cash services, accounting services, personal taxes, the whole stack. One stop.
Specifically for doctors and their practices.
Doctors and dentists, high net worth, yeah.
If you look at the fastest growing accounting firms, that is what they have in common, is the focus on the customer. We serve exclusively nonprofits. That was why PTC's go-to-market. It's really about serving that particular customer. If you can focus like that and you don't do everything for everyone, your margins are just so much better. You just create such a better customer experience, like what you're talking about. You can solve a lot of problems. If you solve more problems for fewer people, you're going to have a better firm, for sure.
Yeah, because these doctors have more money than time.
Right? That's right.
And so
exactly.
They're giving the doctors back time because now the doctors don't have to have 8 relationships with people. I kind of want this. I still keep questioning. Aprio is going to do legal services now in Arizona, right?
That's the plan.
Because even the separation of that, I'm like, I want help to file my corporation's minutes. Why can't my accounting firm help me with that? Right? There's these barriers that are not what the client wants. The client wants what this company is doing. It's genius. It's really, really smart. Now, I imagine this is going to cause problems because, they're the investment company, but now they have CPAs. They're going to have to tell them to take off CPA from their profile. It's going to be a big mess. But the focus of what the problem they solve for the client is so smart. This is such a good business. It's genius. They'll do payroll for this as well, retirement plans. They'll do all that stuff spun up for. So you have a one-stop shop if you're a doctor to go to.
Now, what's the downside of that? Zephael brings up a good point in the YouTube chat. Zephael says, I'd be afraid of locking myself into a single company as a doctor. If they mess up, you'll have a big headache.
That's true.
So I guess it depends on what's your appetite for that risk. I imagine if you're a busy doctor and they've got good track history, though, you're willing to take that chance, like you
Every
said,
time I
David.
visit a doctor, I'm putting everything into one single guy, and if he makes a mistake, it's a big risk. So
Yeah.
it's kind of the same thing.
Hey, regarding our final sponsor message, that ad for Team Up, the Diadeck says, very cool ad readout advertising replacing my accounting career, LOL. We've gotten that actually from a few listeners who have said they're not fans of the outsourcing company ads. And I just want to say that we don't, like, what do I want to say? If somebody has a service they provide to accountants and they want to advertise on our podcast, and we don't think there's something unethical going on, right? If we don't know, like, we let them do it. They want to reach you. They want to talk to you. So I would also say that outsourcing and offshoring is not necessarily a bad thing for your career. Because if you're doing the kind of stuff that is getting offshored, that's going to get eliminated by AI anyway.
Yeah, I think if you're a listener and you have your own firm and you're struggling to fill positions, this is a viable option. But if you're just somebody at the firm, you're not a firm leader, I could see how, this feels like, wait a second, I'm going to get replaced by offshore. But it's really filling gaps in teams, because you can't, again, there's a shortage. You can't hire everybody. It's very,
well, and
very
the way that you overcome that is, don't be the person sitting behind their desk just plugging numbers or running reports or doing the grunt work. Is get in front of clients, because that is something that you can't do easily from abroad.
I think there's so much work for accounting and accountants in demand that I have not heard any stories of, oh, we're getting rid of all these accountants because we used outsourced labor. Like, I don't feel like it's a replacement. It's really just giving you an outsourced teammate, maybe. But yeah, the comments have came in for sure.
Changing topics, the SEC is going to allow some stablecoins to be treated as cash equivalents. There are strict requirements, though. Stablecoins have to be fully backed by cash or treasury bills, maintain a one-to-one peg to the dollar, and guarantee redemption rights. This excludes algorithmic stablecoins and anything not tied to USD. But I do have concerns about this because, like we talked about in a previous episode, the whole stablecoin regime is going to depend on auditors doing monthly attestation reports to back up the reserves, and annual audits for issuers of stablecoins that are big enough. But I think a lot of stablecoin issuers are not going to have those audits. So imagine a world in which we now have the cash on public company balance sheets or private company balance sheets, and a good chunk of that cash is in stablecoins. Well, it's easy when it's cash in a bank to trust the confirmations happen, the cash exists. It's, I think, harder for me to believe that asset exists when the auditor had to rely then on like a second opinion of somebody who audits the stablecoin issuer. We're creating layers of attest responsibility. And if there are gaps in any way, if these stablecoins are not truly backed, I'm not sure if the investors are going to be as protected as if it's like cash in the bank. I don't know if this is possible to stop. It seems like we're just headed in this direction, but I could see this creating some systemic risk for the economy, where we have these essentially derivatives, stablecoins, right, on top of cash that should be in treasuries or in the bank. Is it really there?
And I think it's going to be gamed and played with because it's so instantaneous, right? Like, they're going to game it and then get it to the reserve number it's supposed to be at the day the auditor comes, then game it the next day, right?
Could you do that? I mean,
happening.
That's an interesting thought experiment. Is could you take your stable coins and then on the first of the month, you go and gamble them?
Yeah, you can do a bunch of risky stuff for 30 days and
then pull it all back into the stable coins when it's time to do the attestation report. I wonder if there's going to be any safeguards for that in the standards that come out for auditors. It really should be like a continuous audit. It can't just be at one point in time,
And
because,
that's what's insane
like you said,
about this. They should be able to just see this at any time, right? It's a digital fund. Like how is this not just an automated process that's just there's a dashboard at the SEC and it's all these green dots, and as soon as one turns red, go contact that company and see what's up. It seems like this is super automatable based on what it is, but I think it could be gamed. It's probably going to get gamed.
I agree. More stablecoin news. China, which banned all cryptocurrency transactions in 2021, is now rethinking that, and they are scrambling to consider yuan-backed stablecoins. The reason? Fear of missing out. Because of the Genius Act and this new stablecoin regulation in the United States, China is worried that U.S. denominated stablecoins will end up being the global currency, which will continue our hegemony over money in the global economy. But if China can create its own stablecoins that are used alternatively, then they could take economic power in that sense.
But isn't the Chinese yuan tied 1-to-1 perfectly to the USD already? So is this just an exercise
they
in
manipulate it.
pointlessness?
They manipulate it, yeah. But no, I don't. I mean, that was true in the past, but that might be one of those things, David, where it's like a timing.
We're going to have to research this.
You might be remembering something from like your much younger days.
The yuan's the original stable coin. It was pinned to a 1-to-1 value of a US dollar.
Well, it wasn't 1-to-1 ever, but there was a ratio. There was a relationship.
A ratio of some type. Okay.
Yeah. David, do you want to talk about KPMG and Silicon Valley Bank?
KPMG. So this is really a follow-up story. You remember the Silicon Valley Bank collapse? And
How could I forget it? Man, that was one of the most exciting times in news.
And the concept was like, how could KPMG miss this? And then you went and looked at the K1 filings, right? Mm-hmm. K1, right? So
I think so. I went and looked at the financials.
I'm making up a number. I'm not a CPA. I'm just pretending, right? Remember this. And you to like the 90th page of footnotes, you found a little sentence that maybe could have alerted people that there was possibly an issue. Well, there's a class action suit from investors of Silicon Valley Bank that bought stock between January 1st of 2021 and March 10th of 2023. And they're suing KPMG, basically saying that they didn't provide good enough statements when they audited Silicon Valley Bank. And so they basically asked the judge, so they asked the judge to dismiss the suit because they suggest that they actually had it for over a year before they issued an audit opinion that actually had that before the bank failed, and about the liquidity issues that were happening at the bank.
Of the held to maturity securities.
Yeah, so they're asking the judge to completely dismiss the case. We'll see. But they already had a judge before on June 13th ruled that there's sufficient evidence that they had misleading statements by SVB and its auditors. So I don't think they're going to. And that was 2024 when a judge already ruled that there was enough evidence. So, but Silicon Valley, obviously, like, of course you're going to try to get out of this if you're being sued, right? Makes sense. KPMG.
The auditors are rarely ever held responsible for this kind of stuff because there's so many protections. That's why audit's a great business. There's really not that much risk in it if you check all the boxes. Some more follow-up, David. Macy's is clawing back over $600,000 in executive bonuses after discovering that their 2023 pay was based on inflated profit numbers. We previously reported on the show about how an employee had been hiding $151 million in delivery expenses since 2021, which made the company's EBITDA look better than it actually was. The executive bonuses were tied to the inflated numbers, so now executives have to pay back the overpayments. Executive bonus payouts dropped from 60% of target to 52% once the real numbers came out. As of April, Macy's was still looking to recover $352,000 from executives. I posted about this on Twitter, and somebody commented and said, just don't use bonuses based on EBITDA. And I have to agree. It's a stupid, stupid way to motivate your executives because EBITDA, earnings before taxes, interest, depreciation, amortization, is a consequence of management. It's not something that could be managed directly. The only way you can manage it directly is to cook the books.
Yeah.
So don't bonus people based on the bottom line number. You're just creating bad incentives. Now, I'm not saying that was the reason this happened, but it's a lesson. I mean, it could have been intentional. Like there's a possibility.
Was the reason just like an accounting misunderstanding? Was that kind of what we concluded after all that?
We never really found out the whole story, but it sounded like somebody didn't know what they were doing and hid the mistake by doing the same thing over and over.
They didn't want to go
again
ask for help, basically. They didn't want to ask for help. That's right.
And so the account, a balance sheet account that should have been an expense, just kept accumulating until finally somebody noticed it. So that's a failure of internal controls there, obviously, is that nobody was looking at this number that just kept growing on the balance sheet. Another follow-up story. Remember Luckin Coffee and its massive fraud scandal? The PCAOB has finally shut down the Hong Kong accounting firm that audited Luckin Coffee. Luckin had retained this firm as their auditor after settling SEC fraud charges in 2020 for fabricating transactions. But during the 2021 audit, the Hong Kong firm completely ignored the prior fraud when assessing risks. They failed to design proper audit procedures despite knowing about the company's history of inflating revenue expenses. The firm and its owner also violated accounting standards across multiple Chinese audits, showing a pattern of inadequate work. Now, David, do you want to guess the number of the financial penalty for this firm?
$48,000 was the fine.
You're a little low on that. The price is wrong, David. It was $75,000. But I think we can all agree that $75,000 for doing a failed audit of this giant company, Luckin Coffee, is like probably nothing compared to the audit fee they received. The financial
Maybe the fine
penalties
should be the audit fee, or 90% of the audit fee, or something like that. That's how they should do the fees.
They should take away all the profits. But it should be more than that, right? Because if all you lose is the profit you made, then there's really, there's not that much risk in doing bad audits. It should be significantly higher. It should really be painful. And I'm going to guarantee you that $75,000 to an audit firm. I mean, when I don't know what partners in Hong Kong make, but here, audit partners at a big firm, you're talking $500,000 to $1 million a year is like normal. Depends on the size of the firm, obviously, but even in small firms, you're going from hundreds of thousands to over $1 million a year in compensation just for one partner. So a $75,000 fine. It's, I think, an example of how the PCAOB
it's immaterial. The fines are immaterial.
Ineffective. And it's a lot of naming and shaming. And yeah, you can revoke the registration, but this happens years and years later. So like I've said in the past, you could just set up a sham audit firm and do sham audits for a really, really long time before you finally get caught.
And keep CPA on your LinkedIn profile and not have to take it off.
Yeah, BF Borgers, great example of that, right? Did fake audits for years and years and years, finally gets caught. The financial penalties are insignificant compared to what he probably made. And he hasn't gone to jail. There's no consequences. So what are these state boards of accountancy doing? How are they protecting the public? Taking CPA off of people's LinkedIn profiles. It's just shameful.
That's
all right, last follow-up story. Mike Lynch's estate got hit with a almost $1 billion judgment from Hewlett-Packard Enterprise. This was a story.
Again? Was this the boat that sank?
Yes.
Okay.
So Mike Lynch sold his software company Autonomy to Hewlett-Packard Enterprise in 2011 for a ton of money. He became a billionaire, if he wasn't already, and he had that yacht accident last summer where he was celebrating his acquittal on criminal fraud charges related to this deal with his family and friends on this yacht I think it was in the Mediterranean. There was a freak storm, and it capsized the yacht, and he drowned along with like a bunch of his friends and family. They called him Britain's Bill Gates. Yeah, he sold the company for $11 billion. But HP later accused him of inflating the company's value and wrote down autonomy by $8.8 billion. What a write-off. The civil case found Lynch liable in 2022, but he beat the criminal charges.
Yeah, and HP was trying to get the money back. And then he just magically has now vanished. How convenient.
Yeah. So
I can end on the show on an upbeat news note.
Go for it.
Do you remember a few months ago, we were talking, almost a year ago maybe, we were talking about there were signs of that we're going to be in a recession?
Yeah.
And one of those signs were dating apps. People were not using the dating apps. They weren't using the paid versions, just the free versions. Well, this last week, Match Group, so they own like all the dating apps. Their stock popped 10% on Wednesday because they beat their expected revenues. The expected was $890 million, and the revenues came in between $910 million to $920 million. So almost like $30 million more in revenue. And they have all this momentum now because they've added some AI features like AI discovery. And then I don't even know what this is, but a double date feature on Tinder. I don't even know what that means. But they've added these new features that are getting all this uptick. 90% of the users are under the age of 30. So maybe the recession's not going to happen. People are, the dating apps and the dating websites are making money. So maybe there's not going to be a recession.
I had a conversation with Gusto senior economist Nick Tremper that will be coming out soon on the Earmark podcast. And my takeaway from him was similar, which is that actually the numbers are okay. Like small businesses in particular are doing okay despite the tariff headwinds, despite the immigration stuff. We haven't had the catastrophic outcome that we were talking about. And that's because we didn't get the 100% tariffs in most cases. And so I'm optimistic, but I feel like all it would take is one big event, some sort of economic catastrophe or natural disaster or world event.
Wasn't there a new virus or something happening?
Please don't say that. I cannot do.
I swear I saw something.
David, I can't do another COVID. Okay. I can't. I love working from home, but I can't be at home all the time.
Yes.
You're giving me, I'm getting anxiety thinking about it. All right, we didn't get to the fundraising news, all these new app features integrations. We'll have to, hopefully we can kick off next time with that.
Here's what we'll do next week. I'm going to put them in a little table, and we can just run through them. We'll screen share it, and we'll talk about all the raises.
Okay.
And
David,
yeah, Billy Long is gone. This is crazy on Twitter.
Well, again, the New York Times story said it was 4 sources that weren't named, so not confirmed for sure.
People are saying,
but
that their interns stay longer than
Billy Long.
It's the shortest stint ever for a Senate-confirmed IRS commissioner ever. So he set a record, just probably not the one he wanted.
I really want to know the backstory. I hope we get to find out what happened.
Tune in next week.
And earn free continuing professional education credit for listening to this episode and past episodes of the Accounting Podcast. Go to earmark.app in your web browser or download the free app for iOS or Android. Create your free account and discover the amazing world of accounting and tax podcasts that give you CPE credit for listening. And if you're an IRS enrolled agent, look for that IRS CE banner on the courses. You can also filter for those in the search. And you can find courses on federal tax topics and ethics topics that will help you get your IRS continuing education credits. So there's really no excuse not to be all caught up with your continuing education because you can just do it every week. You can listen to our show. You can listen to other shows. You can do it while you're working out. You can do it while you're driving. Our goal is to make it as easy as possible to earn that CPE. And I know what a pain it is. I'm a CPA. I have to get 40 hours a year. I did not like how I had to do it before Earmark, so I created Earmark for myself and for all of you. So join me and join our mission to make continuing education more relevant, easier, and just higher quality too. David, See you around here next week. And thank you to everyone who joined us live today. Have a great weekend.
Bye, everyone.